Hello, welcome back to Income Trading 101. Today we're going to take a look at Caterpillar, one of the um, key industrial and manufacturing producing companies. One of the things that tipped me off to them was just taking a look at their dividend, and their quarterly dividends right now are ranging in the, let's see, in the $1 range, which means on a $200 stock, getting $400 a year. That's roughly 5%. It'd be great if I could click on one of the dividends here. There we go, $1.03 in that quarter. Another $1.03. So yeah, roughly $4 a year. Stock's trading for almost $200 per share. So you're looking at 5% dividend income just for owning the stock. It's very interesting. There are obviously some other yield trades you can put in there. Selling puts, put spreads against this stock. I mean, look at this nice strong rally. But before I get started there, let me expand it all the way out. So we've got. I'm looking at the data since the stock price since mid 2010. And this has been, they had a period of really flat prices, came off a bit in from mid 14 down to beginning of 16, had a nice rally, came on back down, obviously took a hit with everyone else back here in March of 2020, and has just been on a tear since then. I mean, this is about as strong a rally as you see. And just for comparison's sake, I'd love to put. Well, we'll compare it a little bit later. I'm going to go ahead and get rid of volume as I do in most of these videos. I'm not a volume trader. There are technical trades that you can make around volume, but I'm just not one to use them. I'm going to go ahead and pull this back out too, so we're really really looking. Well, before I do that, I'm going to go ahead and add our indicators in. We're going to go ahead and look at a moving average to start off as usual. And I'm going to pull three. If you guys have watched these videos, you've seen me do my short term, my near term is the 10-day. I like to have that in green. There, you can set up whatever colors you want. I just like green for buying and red for sell signals. And some people might have a different color scheme in mind. You do whatever makes you feel best. Trading is such an individual skill that really, whatever you see, whatever works for you is what you should absolutely do. So let's go ahead and pull this on in so that we can make use of these of this information. And one of the things I wanted to see right off the bat was just how this played out, how the moving averages helped, or how they operated in more of a longer term bear market. I would call this period from 18 really through the beginning of 2020 a bear market. I'm sort of shading, if you will, the first quarter, Q1 of 2020, because that's when the world kind of realized there was a global pandemic and systematic risk, and you can't really hedge against that per se, not at least in an individual company. But look at this, right? Look at this rally. So what do you do here? We've got stock at all-time highs, right? It's all-time highs, and just a strong move up. I'm not contrarian enough to even consider selling this. This is just killer. This is a strong move higher. Let's look at it on some smaller time frames and see how it looks. So in smaller time frames, you're going to get a little bit more volatility. You can see we've had a little bit of a pullback during the month of January 2021, and now it's just been back on a tear, not quite to the previous high, which was closer to $200 a share, but something tells me we will probably hit that coming up soon. There are some gap moves in here, but you can see the stock by and large has covered its gaps You get gaps there. Can it pull back? Will it have to fill those gaps in? Will it have to fill them in before going higher? There's nothing to say that a gap has to be filled. In fact, look at this. You had a gap back in on January the 6th, right? We didn't see that price level again uh, for 20 days, January 26th, which led to another gap that got filled in on January the 28th, and we've been going higher. So we've got a gap here on February the 8th. Maybe it's going to fill in on February 28th would actually be a Sunday, March 1st, or maybe Friday the 26th. It's irrelevant. Keep an eye on it. Like with all of these technical indicators, keep an eye on it. But I'm not going to short this market in anticipation of it filling this gap this week or tomorrow. It very well might, but I'm still, given the size and strength of this overall trend, this up move, I'd be very hesitant to sell. So these are the 1 hour. This is 1 hour charts. So many places where you see the like even right now you have all three moving averages in line. Now, given that we've had a couple hours of pullback, I'd wait to see this get another green bar, a couple of green bars in a row, and just go ahead and look to buy it, or however you tend to pursue a bullish pattern. Now we're at all-time highs, so there are no guarantees, but if it does come off, we will definitely be looking at more of a Fibonacci retracement of it. But even in this short run, I mean, this is almost a 100% retracement. So when stocks are moving, normally we expect a 50% retracement of a previous move, and that's that's part of the Fibonacci sequence. But it's not part of the sequence, but it's one of the technical indicators that gets considered when it comes to retracements. Also, we look at like the 38.2 percent retracement. You have the 61, I think it's 61.8. Anyway, we'll get to that a little bit later. Needless to say, we haven't seen a retracement in this stock that didn't lead to a full recovery. Like even this pullback here in late October had a full recovery and then some. Can pull it down one more time. We'll pull it to the 15-minute level for those of you who are really like ultra short term. I guess ultra short could be actually at the 1 minute level, but even here you have a scenario where we're still seeing green line above red line, and then all of it above the yellow. The yellow being our 60 period moving average. So I like moving averages. They definitely have a place in my heart and in my trading style, but I'm also very aware of the fact that they are a lagging indicator. So you really have to be on top of it, and how you use these moving averages for your trading style. Let's take a quick look at I'm back to 1 day charts. Let's take a quick look at the MACD. I always like just seeing if there's some momentum in the market that is also worth taking a trade on. Well, this thing kind of hops back and forth. This MACD indicator is really quite interesting. Part of the challenge in using the MACD right now as well is the fact that we've been in a long-term uptrend. So you're going to see more data, crossovers and whatnot above the zero line. And I wouldn't advise trading these short-term crossovers, because you're just going to get chopped up. It's easy to get chopped up in this scenario. So let's take it down. I'll just take it down to the 1 hour to see if that provides any additional information. So the 1 hour is a little bit better, but still, I don't think this is your best indicator for this market. For this time period. I'm sorry. It's not the market; it's the time period. We're in a longer term up move, so it's going to behave in a certain way that I really don't think is as valuable. And then, as I mentioned, it's hard to use a Fibonacci retracement right now, just because we've had 100% retracements. But what I will do is take a look at a little bit of a channel. I like the visual that you get from connecting various. Look at that! I connected pretty easily four different low points, right? And then I can draw in a line that almost connects all of the highs or contains all of the highs. The only one that moved out of this range is the one that that happened back here in May, or yeah, May. I'm sorry, that's actually June. June the 4th and 5th. But aside from that, we've had a pretty consistent upwardly trending channel. And if we were to test the upper limits of this channel, right now you're looking at a price of roughly 200. Sorry, my screen is blocking it. About $207, which would be a solid $10 higher from where we are, 5%. So I like channels because it just gives me an idea of the full range and slope of the upward trend. It also will give me a better indication of when that trend has broken. So right now, the most recent low is that $179, $180 range. So as long as we're staying in this channel, I'm assuming that we're trending higher. If we break out of the channel, lower or higher, it means that there's been a marked change in the pattern and the slope of this market, and that you really need to pay attention on buying, selling, whatever you decide to do. So that's it for this chart. If I were looking to play this right now, and I will be, I'd be looking at selling put spreads, things that will. If the good thing about selling puts is that if you sold a put and the market goes lower and triggers that put, that just means that you're buying stock at a discount. And unless you truly believe that this stock is going to crash for some reason, which I don't at the time, then selling puts can be a great way to add additional yield to finance the purchase of this stock. $200 is not a cheap stock. Buying 100 lot will cost you 20 grand. But you can sell puts, and you also know that you're getting a 2% dividend yield. Of course, yesterday we looked at a company that had almost a 10% dividend yield. So those of you who play dividends, definitely are some great ways to pick up dividend stock at a discount as well. But I like stocks that pay you to hold. And as long as it's trending higher, you can always do things like covered calls, selling calls against the stock you own. You can sell puts, which might ultimately allow you to buy stock at a discount. But by and large, in an upward trending market, those puts are going to just continue to finance your position. So ways to own stock at a discount ultimately. So that's it. Thank you guys so much for watching this video. Feel free to subscribe so that you'll be alerted when I make more videos. And until tomorrow, have a great day. Happy trading.